Good evening. I hope everyone is having a good evening. I'm going to kind of fly through these. These are pretty self-explanatory. Once I start explaining it, you'll get a better idea of what everything looks like. I know it's a lot going on, but I'm just going to kind of fly through these. But I do just kind of want to make a PSA in regard to my availability. If you are a paying student, you will continue to receive weekly meetings plus weekly sessions that are recorded. So I'll pick a day during the week. I will kind of go over what we discussed on the days that we met, and then I'll send you videos of my markups and my ideas, my trade ideas for the week. And then for those that are not paying, we will meet twice a month. If you have any questions, you could always bring them to me on the days that we have scheduled to meet. And I will also be sending you videos as well, but they won't be as detailed. So this is just a courtesy. However, moving forward, most videos are not going to be as lengthy as this one here. I just want to make sure that all my students are on the same page so that I can have a pretty simple process going on here. So we're going to talk about basic day trading stuff. This board and my next board are pretty much just one flowing into the other. And a lot of this is also just going to be a recap for students that I already work with. And then we'll just kind of start fresh on some newer topics starting next week. So, welcome to Day Trading 101. My name is Mayim. I am a day trader. I've been day trading at this point for about 5 years now. I found out about it on Instagram, pretty much like everybody else right before COVID. This guy was like, hey, do you want to make money online? And I'm like, sure, why not? At that time, things were not necessarily going the best as far as like income was concerned. My job had just let me go. Or no, that's a lie. This was before that. So this is like 6 months before COVID. And so he had sent me this link to sign up. It was with IML, just like most people who found out about day trading. It was through IML. And at that time, I was like, you know what? What's the harm in it? When I figured out that, when you do the math, they wanted you to find 5 people with $225 to invest, but then realistically speaking, that's about $1,000. That if I would have put that in a trading account, is will tell me where I would have been by that point. So instead of me taking that money to invest into a trading account, they wanted me to take it to pretty much upsell to the next level. And I didn't want to do that. It didn't make sense. So I said, I'm not going to do that. I went ahead, I got on Google, I got on YouTube to see like what everybody's thoughts were on IML, and they were not good reviews. So I said, well, let me see what this day trading thing's about. So I got on MetaTrader like they told me. I think it was Euro USD. I couldn't remember which pair it was, but I got on there and I'm like, I think I pressed buy, and I woke up to like 30,000 in profit. I said, oh, this is nice. How do I get this out of here? Figuring out it was a demo account, I said, okay, so what is this and how do I figure it out? So I've been figuring it out for some time, and now I'm at a point where I feel like I'm in a position to share the knowledge that I have that got me to the point that I am now. Has trading paid my bills in the past? Absolutely. I am actually currently transitioning back into full-time day trading. It is a bit of a challenge right now, but I am doing it. And right now I'm in a season of obedience where God is just kind of like, just teach people how to trade. Some students do pay, some don't. So I'm going to have a different system for each of those. Some are just going to have a little bit more access to me than others. And I think that's just fair. So for right now, I'm going to close this out so that way the alerts don't keep coming through. But yeah, so now I'm just teaching what I know, and to those that want to learn, here's the free information that you guys have been asking for. If you want to join my Discord, the link is in the description. If you've received this if you've received this video via email, you got to first look. So you can actually click the link in the email and it'll take you to the Discord. And we'll just kind of go from there. So yeah, we'll go along as we'll figure it out as we go along. So we're going to talk about two sets of basic information: key levels, candlestick opening and closures, bulls and bears, time frames, things of that nature. Then we're going to go on to the next slide, which talks about candlestick patterns, and where they're the most relevant and effective, and things of that nature. So let's get started. All right. So key levels. This is where price decides to go to claim its territory. Support and resistance are interchangeable. Supply and demand are not. Okay. I'm going to put this here. Now, I just want to make this little disclaimer. Supply and demand are not the same as support and resistance, but they are very similar. They do serve a similar purpose. But they are the levels that that to my understanding, that sit in between levels of support and resistance. So while they may serve the same purpose, they are not the same thing. Okay. So if you look here, this is your legend. Red is equivalent to a breakout candle. Yellow is the retest. Okay. So support and resistance are interchangeable. Resistance is your roof. Support is your floor. I'm going to put this up here so you can see it. Resistance is your roof. Support is your floor. Resistance are where your sellers are in control. Support are where your buyers are in control. So in so many words, in this case, let's just say that this blue line right here used to be a level of resistance, right? Let's just say this was resistance. Let's just say at some point there were sellers that were just sitting under this level here. And then now the buyers are like, y'all had y'all time. It's time for us to come in. Boom. Right? Once the candlestick closes above, not breaks above, closes above a level of what was resistance, it then turns into support. What solidifies that particular level turning into that is price retesting it. And when we say price, we typically mean the candlestick. If the candlestick comes back down and retests this level here, it doesn't close back below here. If it had closed back below here, because then at that point, this would have just been a fake breakout. But in this scenario here, price only just came back to retest it. It just tapped it a little bit. It said, boop. We're not going nowhere else. So buyers came into the market. Sellers tried to come back in, but the buyers are defending this level here. So they're just kind of like, oh, we can't go past this level right now. And it's just retesting it. So now this level has become support. It is no longer resistance. And the same thing goes for resistance. If the sellers have at some point, right? At some point, buyers were just bouncing on top of this level here. It wouldn't close below it or whatever the case is. But sellers said, you had your time. It's time for us to come in and take over. Sellers close below this previous level of support. It then turns into resistance. Once price retests that level, as it does here, remember the retest does not mean that it closed back above. The retest means it just tapped the level, and once it did that, it just stayed below it, and the sellers remain in control. So resistance are where the sellers are in control. Support are where the buyers are in control. I had a brain fart, y'all. Excuse me. Okay. Resistance is your roof. Support is your floor. Supply and demand are not interchangeable. They're not the same thing. Supply and demand are something completely different. I'm not going to discuss supply and demand today because that deserves its own little, whoop-de-doo or whatever. So we're going to keep it simple today. But you guys can do with this information what you will. All right. So let's move on to candlesticks. Now, bulls equals buyers, bears or sellers, bulls strike up, bears strike down. The only common thing between the buyer or the bull and bear candle are the wicks. Bottom wicks represent the lowest price, top wick represent the highest price. Only difference in the candles are how they open. So in this case, for buys candlesticks open from the bottom, close at the top. That's why we have this label here. Opens down here, closes up here. Same thing from here. It opens from down up here, closes down here. Oh, y'all, I gotta plug in my laptop, so I gotta make this quick. Okay, so that's pretty much how a candlestick opens. The seller candlesticks open from the top down. Buy candlesticks open from the bottom up. That's it. Okay. Time frames. Each candlestick represents how much time it took for the candle to form, i.e. the 1 hour time frame is equivalent to the candle forming in 1 hour. So you go to the 4 hour time frame, each candlestick represents 4 hours. You go to the 30-minute, they represent 30 minutes. If you go to the daily, they represent 1 day. If you go to the weekly, they represent 1 week, monthly, so on and so forth. Very simple stuff, you guys. Okay. Sessions. Now, when it comes to trading sessions, you have the London session, which is from 3 to 11, New York session, which is from 9:30 to 4, Asian session, which is from 6 to 2. These sessions, I mean, the sessions matter, but I mean, it depends on your trading style. If you're not a swing trader, then the sessions don't necessarily matter. But if you're an intraday trader or a scalper, then yes, you do need to find a session that works with your lifestyle. If you're a swing trader, the session doesn't necessarily matter at that point. And we're going to talk about one more thing here. I know I'm flying through these, you guys, but it's real simple stuff. So if you need to pause and go back, you're more than welcome to do that. You have an uptrend and downtrend. Higher highs on the uptrend, higher lows, higher highs, higher lows, higher high, higher low. So in this particular case here, this high is higher than this one. This higher high is higher than this one. This higher low is higher than this one. This higher low, excuse me, let me move this up a little bit. This higher low right here is higher than this one. Same thing with lower highs. This lower high is lower than this one. This lower high is lower than this one. This lower high is lower than this one. This lower low is lower than this one. This lower low is lower than this one. Lower highs and higher highs are indication and or impulsive phases. Lower lows and higher lows are correction and or pullback phases. So in this particular case, whenever you see usually bullish and or bearish engulfing candles, if they break and close above a level of support or resistance or supply and demand or whatever the case may be, if it closes above and or below a key level, at that point that move is considered to be an indication on an impulsive move. Then after that, usually what follows after that is a correction and or pullback. So when you hear analysts say the market is pulling back into a key level or whatever the case is, it really just means that in this case, if the buyers have made an impulsive move, the sellers are going to create a bit of a pullback to see if they can come back into that level. 9 times out of 10, if that impulsive move is what it is, then the pullback is usually just a confirmation of that move is confirmed and the trend is confirmed and we're going to the upside. Same thing with the sells. Sellers come in, they close below a key level. The buyers will try to come back up to close above that area, but the sellers are going to defend it. They're going to confirm that this move has been solidified. The sellers are confirm that the sellers are in control, and the sellers continue to take over the market for that time being. So that's pretty much what these mean. I could go into more detail a little later in a different video, but this is just very simple stuff. I see that people are asking for like simple information, and nobody's really creating videos to like give you guys simple information, and that's what I'm aiming to do with this. So let's go to this right here. I like the whiteboard. I really do. I just need to understand the platform a little bit better. So this is pretty straight to the point. Understanding market behavior, trading styles and candlestick patterns plus pips. So you have scalping, intraday trading, swing trading. Now I personally am transitioning into swing trading, where I can hold my trades for days and weeks on end. I have a very busy life. I'm pretty much all over the place. And honestly, sitting in front of a screen all day is just, or for more than like an hour, honestly, it's just not my idea of freedom when it comes to day trading. So I would prefer swing trading. But if you're somebody that feels like you need to either monitor or you're just, your anxiety just won't let you hold a trade for too long, then intraday and or scalping might be the best bet for you. I always tell people find a style that fits their lifestyle. And again, like I said, I'm busy. I run a high school organization. I am a percussion instructor. I run a business. I run businesses for myself. I, am a very busy individual. So I personally would prefer to swing trade. I want to set it and forget it. I want to go about my day and I want to just kind of leave it and let it do what it needs to do. I will set my levels and I just wait for price to hit my levels. When it comes to intraday trading, usually that's within the same day. So the best session for this are usually London and New York sessions. Scalping, there's really not a session for it, but this is where you hold it for like seconds to minutes at a time. You focus on multiple small moves throughout the day. You get in and get out. Your common time frames for that are the 1 minute, 5 minute. The goal is usually to catch again small moves over and over and over again. You do get many opportunities. You do get quicker profits, but the cons are that number one, it's very stressful and it's very easy to overtrade and blow your account. So, I personally do not want to sit there and wait for the entry and then pull the trigger. I don't want to do that. I would prefer to swing trade. I like the bigger picture that I see on the 4-hour daily and weekly time frames. I like to catch the larger market moves. Does it take a little more time to play out? Yes, it does require patience and it does require a larger stop loss, but that's just my trading style. I like to risk big and I like to risk early. So that's just my nature. I'm a risky person. I like to take risk in life. Some risks are a little tough for me to take, but for the most part, I'm pretty open to them because I understand like that's just a part of it, Intraday trading again happens within the same day. You don't hold it overnight, but with swing trading you do because you're trading for days, so you're going to hold it over multiple sessions, over time. And with the swing trading, you don't really go below a 4-hour time frame. With intraday and scalping, you're usually going below the 30-minute or better. So you'll go below the 30-minute time frame on intraday. You'll go below the 15-minute on scalping. So that is something to consider and think about. So if you're trying to figure out what kind of a day trader you want to be, this should help you figure out what style fits your lifestyle, your current lifestyle. If you work, I tell people all the time, if you work a 9 to 5, swing trading might be best for you. You can't swing trade with futures, unfortunately. I have tried, it just doesn't work. Swing trading is obviously best for like Forex markets, crypto, things like that, but not futures. Intraday and scalping are best for futures. I think Forex is just the better market for swing trading. It's the only, in my opinion, the only market that offers you the opportunity to swing trade effectively. Okay, so figure out what your style is. Figure out what fits your lifestyle, and you'll make a decision based off that. Now, important candlestick patterns: bullish engulfing, bearish engulfing, doji, hammer, and shooting stars. So pretty much the bullish engulfing is in the name. It engulfs the previous candle that was bearish. The bearish engulfing engulfs the previous candle that was bullish, and usually gives a signal that price is getting ready to go down if it's bearish, and if it's bullish, it usually means that price is getting ready to go up. If it's a doji, you have a small body with wicks, and that usually means that there's just a lot of indecision in the market. They don't know what direction they want to go in. They don't know if they're going up, down, left, or right. And at that point, we just have to wait for the market to tell us what the next move is, and then we'll go from there. When it comes to the hammer, you get a lower wick. You get a long lower wick at a level of support. Shooting star, you get a long upper wick at a level of resistance. And here are some pictures here that you can reference. I will find this picture. I have it in my laptop, and I'll add it into the email so that you guys can have it for your record. So morning stars, evening stars, I like those. This is what the bearish and bullish engulfing look like. It engulfs the previous candle, and we'll go from there. Now, 3 black crows, 3 white soldiers, I personally don't really pay attention to those, but that's not to say that you shouldn't either. So I highly recommend just finding candlestick patterns that your brain can recognize and learn how to apply it to the market and go from there. This is what a doji looks like. Sometimes it'll look like this. Sometimes it'll look like that. It really just depends on how it closes, but 9 times out of 10 it's usually when there's no color and it's just like black, or if it's just like green or just red, it doesn't necessarily mean that it's going to buy or sell. It just means right now the market's at a pause, and we need to just wait it out and wait for the market to make up its mind on what it wants to do. So here are some notes. Patterns alone are weak. Patterns become powerful when they happen at support, resistance, key levels, and or supply and demand. So in this case here, I'm just giving you guys an idea. Evening stars happen at resistance, morning stars happen at support. So evening stars happen at the end of an uptrend, morning stars happen at the end of a downtrend. Okay, let's go over here to the pips. What are pips? And so you can read this and do what you want with this information. In so many words, pips are literally how many points a pair moves. That's it. If it moves 1 point, that's it. If it moves 10, cool. If it moves 300, fine. That is pretty much what a pip is. It's just the points of how many points a pair moves. It doesn't matter. I'm not saying it doesn't matter, but we don't need to overcomplicate this. And the thing is, there are so many day traders now on social media that are overcomplicating trading with the fair value gaps and the change of characters and the this and the mitigation. And it's just, all of it means the same thing. Pips, points, profit. You need all of them to understand how to get the profit. So pips and points are pretty much the same. How many points did this pair move during this session or these sessions? And that's pretty much it. It doesn't need to be more complicated than what it already is. Okay. So your homework is pretty simple. Mark support and or resistance levels daily. Identify trend direction. Screenshot 3 candlestick patterns and label whether or not this is based on your trading style. You're best in scalping conditions, intraday conditions, and or swing conditions. Okay, now let's go ahead and get on the chart. Waiting on it to open, y'all. Let's close this out. Okay, so I'm going to redo this particular pair here so that you guys can kind of see how I mark my levels. I'm not going to get into liquidity sweeps and all that stuff today. I do not want to overwhelm you. Learning this stuff is overwhelming. It's actually a bit much. So there's really no point in making it more difficult than it needs to be. Okay. So, let's go ahead and delete this. So, I always go to the weekly. Why? Because it gives me a bigger picture on what is happening in the market. So, in this case here, what I see is a bit of consolidation. So, I really just kind of want to stay out of Euro USD right now because it's consolidating, right? So, actually, we're gonna skip this pair because there's not much happening. But what I will do, what's next on the list? GU. Okay. Let's go ahead and get GU. Let's see what GU is doing. Okay. So, in this pair here is GBP USD. We see that there's a bit of an uptrend happening. So I'm going to mark my support out. This is my support right here. Now, usually I prefer for my support level to be like down here. So actually, that's what I'm going to do. We're going to do that. This is a pretty solid level of support. Price has respected. And then this is a pretty solid level of resistance. Now, remember what I said, support and resistance are interchangeable. So that means if price closes above here, retest this area, this is no longer resistance. This now becomes support because buyers are in control and they've regained control. So let me change this real quick. Okay. So again, if price closes above here, this level is no longer resistance. And notice I said close. I didn't say break. Just because price is breaking does not mean that it won't reverse. It won't like snap above and then come back down. It can do that. That's what liquidity sweeps are. But if we see that price has closed above it, it's retested it. It didn't come back below here, because then that would invalidate the idea that price is turning this level into support. But if it closes above it, it retests it, and then it goes back up, then at that point, this is now a level of support. This is no longer a level of resistance. That doesn't mean that this down here changes, because it doesn't. Support is all the way down here. So you do have a few levels of support here that are pretty solid, right? Okay, so we also have to take into consideration that you don't need to make any decisions based off of where price has been in the past. However, it does help you to understand where it could possibly go. You don't need to make any decisions based off of that, though. Please don't. I'm not saying to just make your decisions based off of what happened in the past, but definitely pay attention and see what took place. And what I see here is that price hasn't been up here since January, March. So what, February of 21. It's been 5 years since price has been up here. And that's not to say the price won't go back up there. We don't know. But what I do see right now is that price is at a bit of a halt right here. It won't close above here for whatever the reason is, right? So we're on a daily time frame. Now, we're on a daily time frame now. So I see that price is kind of just hanging around at this area here. And we also do have lower highs, lower lows, lower highs. Here's a previous low that was just created. So I want price to close below this low here. Okay. This is a lower high right here. Now, if I'm wrong, please feel free to correct me, but I'm pretty sure I'm on the right path. Okay, this is a low. I want price to come. Actually, no. Hold on. This is a low. So I want price to close below here, retest, and then I want to ride price down to this point here. But we'll see what happens. But I'm pretty sure price is going to close below. And if I want to scalp this, I actually can. If I want to scalp this, price would have to close below here. I could target this level here, and if I want to get in for another entry, I could still get in below here and ride price down here. So to confirm all of that, draw my fib, and just to be safe, we can do this right here. And not only that, because then that means if price comes below here, it'll have to retest and then come down. So either way, my setup plays out. So I'm just going to wait for it to go off, but that's pretty much how I set my levels. I look for all these wicks. I need multiple wicks in a certain area before I make any decisions. But then I also have this right here. This is a key level for me, because price won't really stay closed above it, right? And that's that. So you guys can get a better idea of what's happening. I know it's just probably like a shock to you, like, oh my gosh. Okay. All right. So this is my setup for GU. This is what I'm waiting for. Now, price could very well completely invalidate all of this and close above here. So I'm just also, for the sake of, I'm just going to create an alert just in case it wants to close above here. But one way or the other, I'm confident in price closing below here and giving me what I need, giving me the setup that I need below this area right here. And I just ride price down. And yeah. So, and I could be wrong. Like, I want to make that very known. I could be wrong, but I doubt that I am, because yeah. So one way or the other, my move is going to play out. I just have to wait for my setup. So it is what it is. So this is pretty much how I view the market. Like I said, we do have these lower lows, lower highs, lower lows, lower highs. So I'm just waiting for price to give us a new low. Once it comes down here and does something, then I know we're in the market, or we're in a good move. But this is pretty much my analysis for GU. I would do some more, but I'm not going to overwhelm y'all. And I want you guys to just kind of take notes and get an idea of, I'm going to keep this how it is, get an idea of, ooh, gold stopped me out. I'm glad I didn't get in. Okay, so let's analyze this real quick, because I was wrong on that. Now, I might not be wrong, honestly. I think gold is just probably, I think it's going to come up here. I think gold is going to drop still. It's just the pullbacks lately have been pretty lethal. Okay. So, yeah. I'm pretty much done. And I will be sending y'all another video sometime next week. And I will talk to y'all then. Bye.